Good day, ladies and gentlemen. I hope you're well. Today we've got Bill Noble with us, a formation man who was meant to be here, but bless him, he's quite poorly today. So we'll see him next week, hopefully. Bill, how are you?
Hi, I'm well. Thanks for having me.
Awesome. No, I'm actually really excited about today. So today we'll be talking about what's been happening to Bitcoin. So much has happened. This market moves so quickly. We'll be talking about Jerome Powell's statement yesterday. We'll be talking about the China FUD. We'll be talking about where this money is going to come from for the bull run. We'll also be talking about the current trend, the micro factors heading into the rest of December and early next year. And then how we should be positioning ourselves, bearing in mind nothing that we say is financial advice. And then, let's take it from there. So much has happened over the weekend. Jerome Powell spoke yesterday. And he focused, as usual, it was just one of his statements that he does all the time. He focused on the economy, how the Federal Reserve was handling inflation. It was blah, 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 pretty much of a repeat of what he does most times. Before his speech, many investors were really hoping that he would indicate a cut in the interest rates by 25 basis points to help boost growth. However, Powell was more cautious. He said that the economy was strong, but inflation was still a problem. At least he recognizes that inflation is still a problem and that no decision was made yet. He did indicate, however, that the Fed will be carefully monitoring the data, the economic data, before deciding on interest rates, which means a rate cut might not happen soon. So this is not the best of news. It actually got it was a political sort of level statement response, and it is open to interpretations because he didn't calm the markets with a strong "we're cutting rate" message. Traders and investors have got a little bit nervous, and the uncertainty has caused Bitcoin to drop sharply. Now, it did fall 6% and it did go just under 85,000 US dollars within a few hours. And more than, I think it was 800 million US dollars was wiped out from positions, mainly long positions. And the whole of the cryptocurrency space lost about I can't remember, but it was a huge amount, like over $1 billion US dollars of value. So, Bill, you've been in TradFi for a long time. You've come and seen these, you come and see these people go. Jerome Powell's not the only person that you've seen as the chair of the Federal Reserve. What was your key take from his speech yesterday? And how do you think that's going to impact investment sentiment and the markets going further?
Okay, so Powell's statement was essentially a non-statement. I mean, what was he going to say? I waited too long to hike rates, and then I hiked rates too much, and then I was too slow to cut. And other than that, I'm having a great career at the Fed. So he just said nothing. Meanwhile,
exactly, wasn't it? It was just literally talking, and there was nothing there. He does this a lot. It's quite annoying, actually.
Right. And the Fed that Powell grew up with, they're normally cryptic. Like, old Fed, there was no press conferences, no announcements. They would send a signal to the market. Wall Street would interpret it and say they just cut or lowered rates. No press conferences back in the day. So Powell said nothing, but then they turned around and injected money into the banking system. The last time they did this in 2019, there was like this funding crisis, banks having trouble getting money, let's call it that. And when they came in this big in 2019, that solved the problem. Now, that issue was not connected to risk assets at the time. This time it is. So effectively, with what they did, they started QE before they stopped QT. And, what was Powell going to say? Well, we really messed up, so we're going to be doing QE in about 2 or 3 hours, and then we're going to cut rates. Now, Powell doesn't have to say that, jokes aside, because they've announced the new Fed chairman for May or they're about to. And his focus is going to be on productivity. In other words, he's going to look at the market the way Greenspan looked at the market and says, well, are the prices of computers falling? Are the prices of hardware falling? Are the price of anything that has to do with productivity falling? And is productivity rising? If so, I can cut rates. If that's the mentality, in other words, if somebody like the American football terms, somebody turns the page in the playbook and tries to run a different plan or a different play, you can have dramatic changes. And of course, with what's going on in Japan, you cannot have a Christmas meltdown. So the Fed is not only going to do what they did with the banking system, but as you can tell by the way this market is behaving as we speak, they've got high-powered money in the system. So there's stuff that they're doing that you can see. There's stuff that you can't see. And frankly, Powell just isn't going to talk about any of it because, like you said, what's he going to say? Well, we better get in there and save those banks. No, he can't say that. So he's talking with the printer.
I completely, and I do apologize, I completely forgot to shout out the chat. I am so naughty. I do apologize. Okay, let's see who's with us today. It's John Legend. I actually just recently found out John Legend's been in my Discord and helping me a lot, but I didn't know it was him. So hello, John Legend. I hope you're well. Thank you for everything that you're doing. Black Hat Team, who's always amazing. We've got Mike Volmer, who's been with me since forever. Bull Runner 79. I hope you're well. I've got a feeling he's from your community.
He is.
Yeah. He's just entered the Discord as well. Bless him.
Right on.
We've got Fairground Fun Fairs, who's amazing. I hope Lauren and the wife are good. We've got Cool Buddy. I hope you're well. Haven't seen you for a while, so that's amazing. We've got Acts 2.21, so 2.21. And then we've got Jane Cartwright. I hope you're well. And Mr. 60. I hope you're well. You're from Reading. Oh my God, that's not too far from me. Awesome. Okay, there's a lot to unpack there. Right, so he spoke yesterday. We were expecting him to say, because if I'm completely honest, I'm not in America, but I do know that a third of the people who have mortgages in America are struggling with their mortgages. 44% of renters are struggling to pay their rent. It does seem that you have a massive problem, a massive cost of living problem. Reducing the interest rates by 2.5 is not going to help dramatically when it comes to your when it comes to the country's debt, which I think now is like 38 trillion or something similar. I can't keep up. But it's going to help average Joe. Were you surprised that he took this sort of line?
Well, no, because what's he going to say? He's like, wow, here at the Fed, we had 9% inflation and 0% Fed funds back in 2021. And now we have the consumer imploding on my watch. You know, employment, rent. Now, he cares and he can't talk about it because of how this has impacted the banks. People are walking away from credit cards. People are walking away from cars. You know, the mortgage payment thing is an issue. These things are all packaged into securities, a la 2008, and they cannot allow this to become a problem. They can't do what they did in 2008. Like, yeah, let Lehman fail. Yeah, let that one go. Oh, no. They have to nip this problem in the bud. Because of inflation, they cannot gigaprint their way out. They cannot let this crisis happen. So, of course, he can't say that. And because he can't say it, people are so used to being told by the Fed, they forget about the secret Fed from the old days. And nobody knows that. So Powell said nothing. Meanwhile, his guys underneath the hood are just, they're just flooding the market with money.
Let's have a look at that. I've actually got something. I think you sent me something, didn't you? Let's have a quick look if I can bring that up. Oh, I can't right now. share the screen and okay, I'm going to bring that up in a second. Before I do, let's talk about this because I don't actually. Oh no, that's the wrong one. That's the wrong one. I am going to bring that up though, but I'm not entirely sure how. Let me just see. Okay, tell me about this. Tell me about the 13 billion US dollars that they've given to the banks. What's all that about? That's new. In fact, until you told me, I didn't actually know what was going on.
Right. Well, it's inside the plumbing of the banking system. So it's outside of people's expertise, frankly, including mine. So if you weren't watching this very specific data about overnight lending between banks, you might have missed it. Now, when I ran this through like deep research, they did this in 2019, and it was effectively considered at that time QE, right? I mean, they can take bonds and give money for overnight, or they can just take bonds and give the money and just say, keep the money. So, when they did this, it was a very innocuous sign. This is like the second biggest injection of this kind ever, behind cough, cold, and flu. So that was their way of signaling that they meant business on this. And with the hysterics over the yen carry trade and all this stuff that everybody got all wound up about, it's not happening at Christmas. It's not. They got a new Fed chairman coming in. It's not happening. So, they have high-powered money in the system now, and it's the same thing they did before meme season started back in the fourth quarter of 2023.
So when it says that it's actually gone, because I don't quite get this, it goes at 13 billion, it's 13.5 billion has gone into the banking system basically overnight. What sort of banks are we talking about? Who are we talking about?
Well, the big ones are the big regional banks. The big regional banks are the ones suffering from the credit card defaults, but who knows? It could be every bank. I mean, banks are sitting on huge unrealized losses, right? So, again, there's what you see they did, and then there's obviously something that we're not seeing, and the only way you can see it is if you look at the price action. Right? They're doing something.
So a lot of people, like I was saying before, a lot of people are facing a lot of financial struggles these days, trying to pay their bills, trying to pay their mortgages, trying to pay their rent. Everyone's tight on cash, all the rest of it. Now, back in 2013, the banks actually kept their rates pretty much near zero. The Fed kept its rates pretty much against zero. That was free money. We were coming out of the banking crisis, pretty much free money. That did help with the 2013 bull run. Sorry, in 2013, rates were pretty much zero. 2017, rates were low for most of the years. There was only two tiny rate hikes of 25 basis points. One of them was in December. A few days later, Bitcoin hit its top in December. But that poured a lot of liquidity in because the rate hikes came right towards the end of the year. In 2021, oh my God. Okay, so we had the full-on money printer, we had stimulus checks, we had zero or near zero interest rates. All that cash flowed in to crypto. A lot of it flew into crypto. There's a clear correlation that if the rates are low, there's loose money, it does help crypto. So where do you think the money is going to come for the next bull run? Are people going to find money to invest? Is some of this nearly 14 billion going to flow up, going to go to the people, if that makes sense?
Okay, well, the 14 billion sadly is not going to the people. But I fully expect Trump to issue stimulus checks to make sure, I don't know, to at least act like he understands what the common man is going through. So they'll probably come through with something to rescue Christmas. Otherwise, retail is going to charge up their credit cards and just walk away. They're just going to walk away if they don't give them something to help continue to make the payments. All right. Now, where's the money going to come from for the next rally? All right. Well, hedge funds were long Bitcoin, short MicroStrategy. They did nothing but sell Bitcoin. So they're out. They have to come back in. Those legacy macro hedge funds. That's why crypto felt so awful, because money was leaving the crypto ecosystem when they unwound that trade. Even if that doesn't make sense, big legacy hedge funds don't have any Bitcoin anymore. OG whales and miners, they sold up at 120. They don't have Bitcoin anymore. All of retail that has money has been forced out and has now been convinced by the imbeciles on crypto Twitter that the cycle's over, it's below a moving average. And it's a nice way of saying all the people who were bullish are now out, bearish, and short. So that is a combustible situation for the entrance. And the answer to your question, Vanguard. So this giant firm the size of BlackRock didn't allow their customers to do the Bitcoin ETF when Bitcoin was at 40. Their customers lost their mind when it was at 120, and then they acquiesced, and Vanguard is in today. They started today. So every Vanguard trader, customer, self-directed, mutual fund, this is gigantic, right? Vanguard is not going to let their customers come in and buy and then watch it go to 70. So Bitcoin now has sponsorship. That's the word I use. I think the new word that they use is structural bid. That's very fancy. I like sponsorship, meaning there's now somebody underneath the market. So hedge funds can't play the kind of game that they played over the Thanksgiving weekend, where, you know, there's a problem with the Japanese bond market and the yen carry trade. Everyone freaks out and they use algorithms to crush Bitcoin in an illiquid market, making you think that there was something wrong when there wasn't. So Bitcoin has been suffering from more sellers than buyers. Everyone is out and Vanguard is now in, along with the Fed. So what happens if they put Michael Saylor on CNBC for everyone on Vanguard to see as this thing starts moving higher? Right? The same process on the downside where it was vertical on the downside. They can just unwind all that and take this back to 104 or 98, something like that.
That's a lot. That's a lot for us to take in. And we have seen the Bitcoin price go right the way down to just a couple of days. Like, I think it was just under 85,000 US dollars, which was absolutely crazy. Let's talk about another massive country. Let's talk about China. So right. On the 29th of November, China's central bank, the PBOC, held a meeting with 13 other agencies and basically doubled down on their crypto crackdown. They said it's a viral currencies like Bitcoin don't still hold any sort of legitimacy. They're totally illegal. They don't have a fiat status, and they were very, very anti-money laundering. Now, what they did do, which was very interesting, because this is completely different to what America's doing, is they called out stable coins for the first time. And they said that there are huge risks for money laundering, dodging capital controls, and all this cross-border concerns. They lacked proper ID checks and all the rest of it, and they can bypass anti-money laundering rules. That's literally the same sort of stance that we have in the UK. We're so anti-money laundering here as well. But the market did freak out when China spoke. Bitcoin dropped about 3% on that day. Bitcoin dropped around about 3%, Ethereum dropped 2.5%, and the whole of the crypto market cap lost about 50 billion in value over 24 hours. Now, stablecoin trading spiked. So people was using stablecoins to hedge And it wasn't a bloodbath like the older Chinese bans. And on this channel, we've spoken about China and China's flooding in 2017, 2013, and again in 2021. But did this move surprise you at all, considering China has a habit of flooding the market and it's been doing that for so many years?
Well, I just love communist crybabies, right? When someone says they're worried about money laundering, that means they don't want any human freedom, or they want to control everything, or both.
Sounds like
Right.
China.
Right. They have a full-on surveillance state right now. So of course they don't like Bitcoin. Of course they don't want any sort of like personal freedom. That's obvious. All right. But what's not obvious is that they're crying about stable coins, that we're going to be able to issue debt and massively proliferate the dollar in a way where, somebody in the emerging market world, China, it's like, wow, we have to have two currencies over here and we have to buy a ton of gold to back it. It's like, wait a minute. People are going to look at that and go, wow, I can get the digital dollar on my phone. So the Chinese are scared. They've been talking about, oh, let's get rid of the dollar. Let's have BRICS. Let's have that garbage. No way. People are going to want the dollar and they're going to want it digital. And there's nothing they can do about it. Nothing. Right. I mean, yeah, they can control things out of China, but they can't control it always out of Hong Kong. So if people wanted to move money out of China through Hong Kong, what's going to stop them? You know what I'm saying? If you have crypto or if you have dollars, they can't do capital controls. And to be fair to the communists, they have very serious problems over there. Like they have printed, lent money, built cities no one lives in. Like, seriously, they have gigantic problems that if there was ever a massive flight of capital out of China, they could have social disorder, meaning like, I don't know, the country could break up. And that's how they think, right? I mean, they think about social order to the point where they've gone to a full surveillance state. They're like, oh, wow, we can do this. Excellent. Because it just guarantees that's their way of keeping the country together. That's how they think, or maintaining order. But, I love to sit there and watch them cry. Now, for the Americans and for everybody in the crypto market, it seems we've forgotten about stablecoins. Remember that? Like, oh, trillions are coming, billions are coming to the market. Stablecoin creation is like bottom left to top right. It is, even as the market was going lower. We forgot about it. Well, the Chinese and the Russians aren't forgetting about it because, Besant has outflanked them with stablecoins.
Let's talk about that, because I haven't forgotten the Genius Act. So the American plan, as far as I'm aware, is to let the stablecoin market grow, because what they want to do is because they're so far in debt. I think America now, in fact, I've got it on my phone, because I was researching this earlier. So in 2013, the first Bitcoin bull run, the American debt was about 17 trillion US dollars. It jumped by 4 trillion to 2017, which was the next bull run. There it was 21 trillion. It added 7 trillion until the next bull run, which was in 2021. But since then, it's added over 10 trillion US dollars. There is literally no end in sight. And the latest plan is to put a lot of debt into stablecoins so they can continue to prop up the market. So in July, Trump's Genius Act said something along the lines of the market, or the stablecoin market, can hit 500 to 700 billion US dollars. And what they wanted to do was they wanted to sell a lot of their bonds and their treasuries, etc., into stablecoin issuers, and then use that money. So that's completely different to what China's doing.
Right. And the Chinese are crying because what they did was they sold all their treasury bonds. So they were going to take us down, right? We're going to have BRICS. We're going to de-dollarize the world. We're going to have everyone using our currency to buy oil. Okay. Right. And then Bessent comes in and replaces them as a buyer of treasuries with the stablecoin universe. So just like in some James Bond movie, their evil plot was foiled. And they're crying about it now.
Mm-hmm. Mm-hmm. Why doesn't it seem like that's a good idea for them, though? Is it just literally that they will lose control with all this digital stuff that they have, this digital ID, ID stuff? So that's more important to keep that control rather than taking a lot of money and taking a lot of debt and putting it into stablecoin issuers.
Right. I mean, I think their primary concern is capital flight. Right. When they say we're worried about money laundering, that means we're worried about personal freedom. They're really worried about capital flight. I mean, they can go into their banking system and shut people out from transferring money out of the country, especially out of places like Hong Kong. They can do that. But if somebody can just get on their phone and use the ETH network or Solana to move money with stable coins, you could have hundreds of billions of dollars moving on these networks. They can't stop that. I mean, they'd have to, I don't know, they'd have to make crypto completely illegal, or I don't know, but they're not going to be able to stop it. And, it's going to proliferate massively because their trading partners may also want the dollar. It's like, oh, wow, I can get the dollar. Cool. Right. They're trying to get everybody to use their currency. And, like I said, BRICS News is a big Twitter account, right? I mean, BRICS has been marketed for years, and then Bessent ended it. They ended it with the Genius Act.
Mm-hmm. Mm-hmm. How is this going to affect stablecoins? What really got to me was that for the first time, they actually named stable coins. So globally, how do you think regulation for stable coins is going to occur? Because the US is very pro stable coins simply because they've got so much debt. And then you've got China, which is a communist country who wants more control, all the rest of it. They're very anti-crypto. So the entire country, the entire world is looking at these two countries on polar opposites. How do you think that's going to affect the rest of the world?
Okay, well, off the top of my head, I think the rest of the world is going to have to wake up and stop trying to take everyone's freedom away. Like, I'm sure you're familiar with what happens if you say the wrong thing on Facebook in England. They're going full CBDC in Europe with the digital euro by 2029. Okay, well, I don't know anybody in Europe that's going to want some sort of surveillance coin when they could have the dollar. So in many ways, the dollar stable coin is a counterpunch to what seemed like an unending march to take everybody's freedom away. Now, I mean, what it's really about is being able to finance our debt and have our country not blow up. But the secondary effect is people are going to want the dollar over whatever else it is that's out there, minus the Swiss franc.
I think you're right. That is so true. Okay, so let's have a look. So this year kicked off really, really well on such a high hope, thanks to Trump's inauguration on the 20th of January. Bitcoin shot up to a record, I think it was $109 on that date, because there was a lot of hype that we were going to have pro-crypto policies, that the US was going to have this Bitcoin reserve, it was going to loosen regulation, all the rest of it. Then we pulled back to below around about $100,000 because there was no announcement right away. And in crypto, we need to have that quite quickly. Otherwise, people just get bored. Quarter one turned out to be quite frustrating after that. Things picked up slightly in quarter two and quarter three. We did rebound. Crypto did hit last month, I think it was 124. I think that's the actual all-time high. Everything just moves so quickly. And that was because of ETF inflows, stablecoin growth, and obviously all this AI stuff and Nvidia stuff, all the rest of it. Recently, what we've seen is that there's been a lot of profit taking. Even though the MVRV is below 6 already, and for those people who watch the show, the channel, they know what the MVRV is. There are a lot of macro worries kicking in now, and we've lost over 1 trillion in the market since summer. Bitcoin is now, I think when I checked it earlier today, it was trading around 87,000 US dollars. I'm not entirely sure what it is now, but it's pretty much around about then. So I won't lie, when we did close round about, was it in the 80s, I was a little bit worried that we were going to go down a little bit more. Now, never has Bitcoin gone below the day it was on election day. Now, the day that it was in November 2024 on an election day was 69,000 odd US dollars. We have come close to that. Even last month we came close to it. I think it went down to like in the 70s. So a lot has happened this year, and even more is happening in the last couple of months. Where do you think your thoughts are for the rest of December going into Q1 next year?
Okay, so good question. Bitcoin is currently at 91 as we're speaking. It was at 87 like this morning. Traded terrible last night.
What did you say? What price is it now? Is it?
It's 91.
I was at work. I didn't check before the stream.
I say the same thing happened to me. I was like, hey Alexa, what's the price of Bitcoin? She's like 90. I'm like, what? I was like, this is unbelievable.
Fast.
Right. This is why I was saying it's screaming. The Fed is in. The Fed is in. Okay. So Bitcoin is going to normalize, right? Like I wish I could say the words because I don't want your YouTube thing to get banned, but this whole thing was BS on the way down. Like 104 to 80 was BS. So they're just going to unwind that. Everybody thinks there's a problem with Bitcoin. There's no problem with Bitcoin. So you can normalize this. Everybody expected equities to catch up with Bitcoin on the downside. Bitcoin is going to go catch up with equities on the upside. So essentially, we're going to reset the range. I think at a minimum, you're going to reset the range between 88 and 98, something like that. And the only reason you'd ever see 88 is if there was some kind of scare trade into this Bank of Japan meeting on the 18th. That's the only reason you would see that. Otherwise, I think it's logical to assume that if the market is above 94, that you could see 98 to 100 and just, again, unwind this artificial selling from, hedge funds, traders, things like that. It's just going to unwind. Now, next year, there are 2 scenarios. The first scenario is Bitcoin actually turns around and makes a new high now. Because if the Bank of Japan doesn't raise rates, and they're not going to, they don't have to. That's my opinion. You can have Bitcoin just go right back where it came from, right back to 120. That's what my co-host thinks. It could get crazy on the upside. And then next year in the Q1, you could have kind of an everything crash when something inevitably happens with stocks, most likely over just the phony baloney accounting in the Magnificent Seven. Just complete baloney. That's going to catch up with them eventually. And that could also impact crypto, obviously. But, you would expect to see a low in the middle of February, according to what we've published. Now, the other scenario is just simply Bitcoin normalizes, finds a range. It gets boring in January, and then you take off. And the theory behind that is, what's the recipe for a rally? Like, how do you bake a cake? Well, you bake a cake with despair. That was last night and the night before. And then you need a quiet range where you might bore people out. And then there might be something negative that happens in February, but Bitcoin doesn't go down or doesn't go down much and then turns around And just like after Silicon Valley Bank, everybody goes, oh my God, and off it goes. So that's the more orderly scenario. The disorderly scenario is, back to the highs, correction in January, and then kind of a slow, gradual trend from there. Those are the choices. I think either way, I think people need to understand that the Fed is in, the new guy's coming in May, and they have to win the midterm elections. And banks are in trouble because the consumer's in trouble. So that just means the Fed has to come in and save everybody.
And this thing about the new guys coming in May, with Jerome Powell almost at the end of his term, what do you think the likelihood he's going to say, forget this, I'm going to leave a good legacy and I'm going to print?
Right. Well, that's absolutely what's going to happen. In other words, Powell has to go along without looking like he's going along. So the new guy's going to get on the tape and say, if productivity is rising, interest rates can fall. That's what he's going to say over and over and over and over again. And of course, AI is going to increase productivity. So Powell can, stay neutral because the new guy is going to be on the tape doing most of the talking. But Powell will be working underneath the surface with Bessent to make sure that we don't have a major problem, because make no mistake, if you look at the Japanese government bond market, if you look at losses in their banks, their insurance companies, the problems with our banks, that could get very serious very quickly. And simply and plainly, it just can't happen. It can't happen. So the new guy will do the talking and Powell will do the printing.
I hate to say this because I lived 2025 with Bitcoin. Didn't expect it to be where it is today. However, when we look back at the volatility of Bitcoin in bull markets, and if we leave the 2027 bull market out of it, because that was quite a while ago, the market cap was low, people can make excuses for that, or they can make arguments for that. But Bitcoin dropped between 30 to 40%, 6 times during the 2017 bull run. And we all know that it crashed 55% in the 2021 bull run, literally right at the middle of the bull run, it crashed. This year, we have already seen 2 30+ crashes or corrections. Nothing so far has killed the bull run. So given the volatility that we're seeing, we're actually doing quite well this bull run so far. I know that sounds absolutely horrible because altcoins haven't performed, but it's not been as bad as the 55% crash that we had in 2021 and the 6 times we fell in 2017. When we look back at this, how are we going to feel?
Well, I think people are going to feel pretty stupid that Bitcoin was at 80 something for the second time. I mean, first it was at 77 in April, then it was at 80. So in 2025, you had 2 shots to buy it. And the second time it was like, it's over for Michael Saylor. It's over for MicroStrategy. It's over for the market. It's a bear market. It's the 55-week moving average, blah, blah, blah. People were like, wow, I can't believe anybody was looking at the market in that way at that time when we're essentially doing a global monetary reset. That and the simple fact, I'm trying to call it up now on my screen. And if I can't, it's very simple. Bitcoin went from 16K to 126K. The 38% retracement, right? Super simple. The 38% retracement, which is the most normal thing in a market. Like in a TA textbook, it's like, I don't know, page 20. The 38% retracement of the massive move up was 84K, where they were selling it yesterday with reckless abandon. I just tried to share the screen. There we go. Here we go. Bitcoin monthly. Okay. From November of 2022 to 125K, they were selling it yesterday And last time at 84 was almost the exact low this time around.
Mm-hmm.
I mean, that's it. That's it, right? It was a completely normal correction in every way. Historically, I think people got so messed up because they wanted their bags to go up and their bags didn't go up. So it was emotional. And of course, there was this narrative that, well, it's Bitcoin and there's an ETF now. So, we're not going to have any more of these 30% corrections. Well, guess what? We had one, right? And institutions, hedge funds are involved. That doesn't mean no volatility. It means, there are options, put options, hedging, hedge funds with complex strategies like, long Bitcoin, short MicroStrategy, and all the gymnastics that came along with that. So just like in 2017, where people may have assigned like, oh my God, it was the China FUD or whatever, everyone assigns meaning to a situation where it just may be more sellers than buyers for whatever reason. And everybody then assumes because of the severity of the price action, there must be something wrong with Bitcoin, when in fact there's nothing wrong with Bitcoin. There's nothing wrong with ETH, Solana, et cetera, et cetera, et cetera. And as long as you have a bag with forward-looking crypto in it, you're going to be okay. I mean, Sui's up 15% right now as we're speaking.
Yeah. So with the hardship comes ease. If we stay in it, hopefully we'll achieve something. But you can't deny the fact altcoins have done really, really poorly. And I think that's what a lot of people in my community are really upset about. It's not Bitcoin, it's altcoins, because we were looking back at the 2020 bull run, the 2017 bull runs, altcoins outperformed Bitcoin massively. And then this time around, it just seems like, man, we should have just got into Bitcoin.
Okay, well, in order to have a bottom, kind of an old school analysis, the key word you have to have is revulsion. In other words, I'm not just bearish. I'm not just depressed. I just want to rage quit and never come back. Like I'm so upset. That's how I feel. And that's what people feel about altcoins, right? Because there's been no rally in altcoins. There's been no trend, as you noted, right? You had a spike, you had meme season. You could argue that was a bear market rally because it went straight up and straight down. And the same thing happened at this time last year, right? With the orange man selling over the top with his meme coin and everything just crashing. So you can say the obvious that there's been no altcoin uptrend, but then you can also ask what happens if you have one. I mean, the value of the future in equities is worth, I don't know, 20 trillion. And altcoins as a whole, everything outside Bitcoin and Ethereum, is probably worth about 800 billion. That's everything. So I understand people are upset. I understand people wanted to, I understand people need to make money. People aren't in altcoins for the heck of it. They're in altcoins because they need to make money. I get it. I get it. But everyone's acting like this is the end. And my argument is it's the beginning. It's the beginning of the bull market. Bitcoin may start it, but how everyone's looking at like layer one, the AI trade inside crypto, lending, clear pool, real world asset. I mean, does anybody remember this stuff? All these coins are destroyed, by the way. Like if you had to rotate out of your bag, out of stuff that you probably don't believe in anymore or whatever's in your bag, if you don't remember why you bought it or you don't like it, call your accountant, do the tax loss selling, and then rotate it into something that's got some hope to it, right? Because this trade has not been done at all.
That's brilliant. So next time we'll talk about Bitcoin dominance. We'll talk about the narratives, and we'll talk about a little bit more about altcoins. That's brilliant, Bill Noble. Thank you for coming on today. And then hopefully we'll have Fomotion on next time as well. And thank you to everyone in the chat. Please do leave a like and a comment, and we'll see you all next week.